The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 106. NASDAQ is off 30. S&P's up 3. Gold contract down $8.10, trading $18.77 an ounce. You get silver off 21 cents, $24.40 an ounce. Light sweet crude up 40 cents, $41.83 a barrel. Notes and bonds. 10-year note flat. 138.07, 30-year up 6 at 172.24, and King Dollar down 117 ticks, trading 92.300. Euro is at 118, the yen is at 103.86, and the British pound's at 132 to 1 U.S. dollar. Tom O'Brien, what's going on?
We got a lot going on this morning, right? The vaccine news, we got earnings. You know, one thing I was looking at, I had too much to talk about, which is great during that 10 o'clock update even, but Lowe's, how about 30.1% for same-store sales? 30% same-store sales growth for the quarter, topping 22.8, and you're down 6% today. Similar kind of to Home Depot, just remarkable, some of these companies and their earnings. But Lowe's, they were at 60. They went all the way to 180, a triple bagger. So they're doing okay in the long run.
I love that you brought that up, because let's go to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time, you want to understand the option market, option strategies, futures, outstanding program. If you haven't test-driven yet the Thinkorswim platform, real easy to do. You're sitting on the website, hit the banner, bring it up. And the reason I want to talk to Kevin, no doubt, as, you know, Target great numbers, Lowe's great numbers, and when we're talking defined risk, folks, this is really important because one goes up and one goes down. The market's saying, what are you going to give me now, Kevin Hinks?
They're going to give you movement.
Yeah.
Tom O'Brien and Tommy, that's what they're going to give you. Because you know what the market really trades off? It really trades. I mean, Lowe's numbers were spectacular, right?
Yeah.
Well, how could that stock possibly be down with those numbers? And here's why. Because stocks run up ahead of these numbers. And what do they trade off, really? Expectations,
Yes.
right? Expectations for these numbers and guidance going forward is what these stocks trade off. So if they miss, when these stocks are at these levels and when these stocks are doing these things on the upside, and you miss by one of these little things that might disappoint, either in earnings per share, obviously they didn't disappoint in same-store sales, but if they guided maybe saying maybe some of the demand was pulled forward, whatever reason they guided, that could take the stock down. Not that Lowe's isn't a great company, it's going to continue to be a great company, but at least for the short term, stocks get overbought, stocks get oversold,
Sure.
and they sell off on news, right? Not rumor of news.
And that, you know, that's what's so cool about the option market, whether you're doing the verticals, whether you're doing the condors, whether the bottom line is that you have spreads inside there, folks, that take advantage of that whole scenario. And, you know, just like you said, I mean, hey, the bottom line is that, you know, these stocks have gone exponential. There's no choice. So the market's saying, okay, what are you going to do for me now? Could you imagine, Kevin, having a business that you grow by 30%? I mean, a monster business. It's like, oh, my God.
It's staggering numbers, yeah.
It's really cool, man. There's no doubt.
Yeah, and that's not going to hurt their profitability. It may just hurt their stock price. Right?
Yes.
So yesterday, if you hit up the Thinkorswim platform at the end of the day, the expected move was about $7. Right now, it's, you know, and the stock moved about 9.5. So that number was a little worse than the expected move, but only by, you know, $2.50.
Right.
The
Sure.
expected move was $7.
Right.
So what you're trading now, it was the expectations, and they were a little less than expected, and so the stock moving a little more. Now, here's the other thing, because you may have traded this risk defined. The great thing about trading risk defined is you don't have to make an adjustment. If let's say your short strike on the downside was the 152.5, right?
Yes.
Lining up with the expected move. Well, you've got 2.5 full trading days for it to maybe bounce back up there or drift back up there, and you don't have to make a an adjustment now because your risk is defined at the price of that vertical spread.
Yes. You know what is amazing to me, Kevin? It seems that, and folks, this is really intriguing, and keep your eye on this in the future. When it seems that even when you have a bad trade, and I'd say I'm talking about a bad trade only by like 2 or 3 points or something, right?
Sure.
What seems to happen is that you always seem to have a chance to get out of it. The real question is, do you get out of it or not? Do you know what I mean? It comes into your number again, and you're saying, oh, should I do it? Should I do it? But it seems that it always gives you that chance, man. I mean, it's so...
Exactly.
It's
now,
wild.
And let's say you're short a $5 put vertical, right? It can go to a total of $5. Well, I guarantee you, with 2.5 days to go, it's not trading anywhere near $5. It doesn't go straight to $5.
Right.
So you still have time. If you decide, you know what, we're dead wrong on this, close it out. And that money that you save there is money that you earn as well, if you're right. But if you think, you know what, I think this is overdone on the downside based on those good numbers, you know, one fun thing to do is to nibble on good companies that had good news and bad price action.
Yes.
Right? What easier scenario to maybe nibble on something post-earnings event? So, you know, Lowe's trading down to 150.85 where it's sitting right now. You know, it's a pretty significant correction from where it was.
Sure. Yeah.
It's a great point. I was thinking the same thing.
Yeah. You know what the numbers are.
Tommy, it's 20% off that number.
And you're back to beginning of August prices, almost July prices that you're getting back into Lowe's after trading up to 180. The same, it's a great way to think of things for sure. Yeah,
in the next quarter, all we're going to be hearing is that how many snow shovels and rock salt and everything else.
Everybody's got to buy stuff for the big parties they're going to throw at home, man. That's what's going to.
Seriously,
right?
Yeah. I mean,
and that's the way you got to look at it. And today, guys, we'll trade Macy's. We'll trade L Brands, and then like Folio will do a presentation on NVIDIA, a big tech behemoth coming out with earnings.
How about L Brands, Kevin? I'll be listening, man. This stock, I've traded the Victoria's Secret deal, right, down to $8. You're sitting at $34. One of the stories, man, that's just remarkable during this whole restrictions COVID deal.
Right. Great comeback in this, man. You're right, Tommy. It got down to $8. So think about that. If you were brave and nibbled on L Brands in mid-March at $8, you've made, think about this.
I know.
You made 4 times your money, 4.5 times your money.
It's amazing.
So, yeah, it's just, that is what you can do. Now, remember, here's the thing, and I say this a lot. You look at these numbers, and you say, well, why didn't I just buy all these names? Well, remember, in mid-March, everything was down there.
Yes.
Everything was historically cheap levels. There's some amazing levels. But what you look at is percentages. And this percentage winner that you had here in L Brands was massive.
Yeah. There's no doubt. It's pretty amazing, actually. And then we have, Apple, brought down those fees a little. That's going to be interesting because what I've seen, Apple and Microsoft's having a hard time moving at all. I mean, so this is going to be intriguing to see where those two little babies are lining up, particularly for the NDX 100. So we'll see.
Yeah, the NASDAQ soft on the day, and the S&P only up 3.
Yeah.
With all the good news that's out there. Pretty interesting.
It is. Kevin, we look forward to the show in 45 minutes. You have a great one and a safe one.
Thanks for having me on, guys.
Thank you.
Thanks, Kevin.
Stay right there, folks. Tommy and I are coming right back. We have the Dow down 100. NASDAQ is off 25. Dow up 100. NASDAQ down 25. S&P's up 3. We'll come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 70, Nasdaq is down 19, S&P's a flat, and we get oil today, Tom.
We sure do. We had a little bit of a shuffle last week, right, with the holidays. But yeah, crude, man. Crude's been one of the strongest things, getting quite a bid from these vaccine news. You know, you're talking about going from $35, $36, $37 area to now a new range of above 40, 42 on the pop today, up 50 cents additional. It's a nice move. $2 really from where we were trading at just yesterday at this similar time.
So let me see here. This is interesting. This is looking differently. Oh no, here it is. Okay, no one. Oh, here we go. Cushing crude, right? No,
we want the
crude oil inventories.
Yes.
There we go. Okay.
What do we got?
So the whisper number is looking for a build of 1.2 million. The survey number was a build of 1.6 million. Right? Is that
okay?
0, 0,
yes, that's
0,
it. Yep, they're looking for 1.2 to 1.6, depending.
Okay, so CL. Let's go take a look at this crude active contract. So,
you have airlines trading higher, right? You got Boeing, the 737 MAX, that's getting certified to fly again. So good news for crude, as you know, these. We all hear the stories, just the vaccines. It doesn't get much better than 95%, man.
That's
so we just
sure.
got to get them out there. And we'll be able to fly again and party again and travel again.
Yeah, and people will want a breakout, man.
A lot of these airlines, if you can probably start booking flights, right? There's free cancellations. It'd be a great time to lock in some deals out there. Just
Cayman Airlines is still not flying.
Who is not?
Cayman.
Cayman,
well,
okay.
It's hard to get to the Caribbean. That's the bottom line.
I have a friend in St. Lucia right now. I haven't talked to them about how they got there, but I discovered they were on a beach in St. Lucia 2 days ago. One of my good friends, and I read up on it, and I believe a lot of those places have to do with you got to show up with a test or you got to get a test.
And then what ends up happening to the Caymans anyway, you got to do that, but then they still quarantine you. So it's like, okay. You're going to go there for 3 days, but you got to be in quarantine for 2 weeks.
Okay, and that's probably is where it varies place to place, right? But certain places, and I think St. Lucia, if you're looking for an arbitrage, you have the ability, you're not high risk, it is a great time to travel, man. Be safe, lock in a deal, and I think you just show up to some of those places, you have a test, you get tested. And then at least they know everybody walking into the country has gotten a test and tested negative, or if they test positive, then they're definitely isolated.
Yes.
Yeah.
So let's take a look at this. We're right now with crude, this baby's running. Let's see. So where is this? We get out of there. Come on, give me the prices up here. Okay, so we're out at 42.01. You're coming up to the top of this deal. This is going to be interesting, man, because we had the spike high up there. You're up today with no volume whatsoever. Interesting. The question is, did that spike high get tested? Okay, so I'm going to go with that. We're not going to get tested at the high. The spike high last week was 43.06. So that would be saying, if I think crude's going to go lower, that would be saying there'd be a bigger build, right? Yeah.
You got it.
Okay.
What are you going for?
Let's see. So they're looking for that. I'm going to 4.5.
Whoa. Okay. Back off 1-0 there.
Yeah.
4.5 build. All right.
Yeah.
We'll see.
It was so outlandish last week. I mean, do you remember anyway?
What was the one last week? Last week it was on at 11, though, wasn't it? Maybe a couple weeks ago.
Oh yeah, meaning from what the survey was versus what we actually, what actually came in. Do you know what I mean?
Yeah. Yeah. There's a lot of variance in estimations going on right now.
Oh man, I'm telling you.
And that's why earnings season is so cool. Not often do you see the ability to have these companies coming into earnings where they're going to crush it out of the park, and you're making bets that you think that it's priced in, right? Some of what's going on. As Kevin said, and it's never what you did for me the last 90 days. It's always what you're going to do for me the next 90, 180, 365 days.
That's right. And it's pretty cool that you get stocks at highs and you get premium still good, because then you're getting you get that spread. That's what makes the option market so cool, really. Once you start understanding what do you have built in to those verticals, or those condors, or whatever type of trade that you're doing inside the option market. You buying or selling the premium. So
yes,
it's pretty cool, man. There's a
lot of premium, and there's a lot of expectations packed into everything. I mean, Target now is up 3.5%.
I know.
Man, and
Target looks like it's going to basically take off like a rocket ship here, man. Let me just pull this
they
back.
were supposed to make $1.60. They made $2.79. They took in $1.7 billion extra in 90 days. And the same store sales were only supposed to be up 11, and they were up 20.7. A lot of these companies, though, they're talking about the increase in costs associated. I know that Lowe's had mentioned it was about $1 billion they've spent in 9 months, 1.1 billion in the first 9 months of the year.
Yeah, well, I'm sure you remember when you were saying. Remember, Target was lagging all of them, and you're saying, man, this doesn't make any sense. This is like a year and a half ago. I mean, and it didn't make any sense, but it was lagging them pretty good, man. Do you know what I mean? And then all of a sudden, I guess it just decided that, hey, man, I'm ready to move.
What it was is that, and I think what I was talking about is that the Target to Walmart story and the Lowe's to Home Depot story,
right?
All of them perfectly positioned to capitalize on online. Everybody's buying everything from Lowe's, Home Depot, Walmart, Target already, along with Amazon, right? But in an environment where you don't need a physical presence as much anymore, and it's just who can drop it off at my door, you should see those companies merge in value when they're comparable services. Why isn't Target able to grab some more market share if you're just kind of pulling up a website and anybody can drop it off, versus Walmart literally having brick and mortar everywhere in the whole country, right? Target, not quite the same reach. Yet they have the same reach if everything is just done online. And you've seen, where Target and, listen, Home Depot's done phenomenally. Walmart's done phenomenally. Walmart with the Walmart Plus, that might be a game changer, man. Target does not have a service like that,
Yeah,
that's a separation, right?
Yeah.
So you'll see that. But, yeah, any of those companies, man, just...
It's huge. And if you take a look at this chart, folks, okay, if you want to see how equities love to come back and test strength, okay? So look at this. When the breakout came August of 2019. In a month, Target goes from 80 to 109, does the breakout with 181 million. Goes all the way up to 130 from the breakout at 80, and then comes all the way back to 90. And you can see the first month it came back to 90 with 169 million shares versus the breakout area at 181. Then it retests that with 130. So your correlation is 130 versus the 169 versus the big breakout. And then it just takes off again, man. It's a mind blower how far it can actually retrace like that, though, man. It's like, man.
Some of these companies, man, it's a lesson learned in terms of, the like Kevin was saying, they sold everything at these lows, right? Some of these companies, man, Amazon, Apple, Microsoft, Walmart, Target, Lowe's, Home Depot, you can make you know what I mean? There were companies that just got sold that if you took a moment and realized the world wasn't going away, man.
And folks, you will see it again.
Right.
You know, you might have to wait 2, 3, 4, 5 years, whatever it is. You always, it just keeps doing it. And every time it's hard to buy. Pretty amazing. Stay right there, folks. Tom and I come right back.
Hey folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now are up 101. You get the Nasdaq down 19. S&Ps are up 6. And rose 769,000 barrels. That's it, man. Nothing big.
Okay. A little light. Let me zoom it in. We're trading at about 42.10 right now. Pretty muted response as it comes in somewhat close, you'd say, right? It was median estimate was 1.6, but we saw the whisper was down at about 1.2.
Yeah.
So
interesting.
Crude's living and dying by the economy right now, man, and those inventories will catch up. The interesting thing is the spigots are off, man. I don't know how, you know what I mean, in terms of the spigots are off. So the spigots are going to open back up as the economy opens back up, but it's kind of hard for that price to move up, I think, when you have so many spigots that are turned off that you just open the spigot.
No doubt.
Just, you know what I'm saying? Yeah. Like $42 is a great price. When everybody's basically
you'd be selling
stopped
everything. If that was in our backyard, sell, right?
Exactly, right. You know, as just like you said, travel, parties, cars, whatever it is, opens back up and we're all using more crude, everyone's going to start producing more crude, man.
Yes, big time.
Yeah.
Let's go to the gold market. So this has been quite and now there was divergence heavily yesterday, folks, as well as this morning. This morning in particular, the dollar was still down. And gold was, like, really down. It was like, you're going to be kidding me. There's a spike low out here this morning at 1860. You're at 1883. And, folks, this is what's so cool about the gold market in general. When I looked at that, Tommy, this morning, I says, oh, this is a trip, man. This is at about 6:30 this morning.
Yep.
That the dollar couldn't hold price. The dollar right now, folks, is digging into its highs of its lows. I think it just dug in a little bit further. The high of the lows of September 1st is 92,399. Now, the reason this is important, folks, is that every time it gets near this number, it gets out of the way like as quick as it can. So we'll see if this is, basically building that cause to break that number, man. I mean,
you're going to find out, right? You can base a little bit, but you'll probably find out. Yeah, it seems to either bounce or, it seems to bounce, but we'll see if it does it again.
Exactly. And if we go over to when you look at the news that's coming out of Europe, meaning, they're claiming this time that they're really going to get a deal in between the UK and the European Union. And in both of those cases, when you look at the euro or the pound, they both look to me like they want to bust topside. So, we'll see where that basically shakes out. We've been through this many times. There's no doubt about that. That being said, though, you can see the pound is ready to go. The pound is peaking up over its level from last week. Last week we were at 133.12. We hit 133. Oh my God, that's crazy. We hit exactly 133.12 today.
Right?
How does that do that, man? Right? You're talking like digits, man, right? Well, in that case, we went to the 1,000 digit, right? Yeah, 3312. That's crazy, man. Anyway, that's what markets love to do, folks. And if you can
might be the 10,000th digit.
Thank you. 10,000. Right? Okay, so that's even crazier. Like, how does that happen? Like,
1/10,000th of a point.
Yeah.
Or a dollar.
Crazy, man. Crazy, right? We were talking with Kevin, I said, Apple still can't move. And, all it takes, folks, Apple and Microsoft. Apple's going sideways, so that's, down 50 cents. And then if we go look at Microsoft, you see Microsoft's getting weaker and weaker. That's down $1.80 today. And, it looks to me like Microsoft's first going to try to fill the gap. The gap's at 208.12. We got down to 209.72 last time. And it looks to me, Microsoft has not tested that high volume low of 196.25. And that's the bottom of the consolidation that Microsoft, where it broke out, going all the way.
What's the date on that? Sorry, that you were looking at?
Yeah, that is the 21st. No, the 18th of September.
September, cool. Yeah. I got you.
And it's pretty set up, man. And what it also is, folks, this is what's cool about this. So watch this. Here, I'm going to put.
And that's right almost just at the 382 retracement. That's why I was asking. So I thought from the full run of the lows of March to the highs of 232,
really?
The 382 is about 194. I've got it up on my chart. So that's where it almost made it back down. It almost made it back down there in November as well, right? And just so it's right at that 382 from that run too.
Now watch this, folks, because if you're looking to buy a good stock, which Microsoft is, right? This consolidation is a large consolidation. The top of it is $232. The bottom, if it makes it there, is 196. But I want to show you this. So when you put your crosshairs across this, you're going to see that the last high volume low, 55 million shares, okay? Well, what got stopped that is that if you get over with the strength, you see 43 million shares. Then we try to get higher with 52. bottom line, it came into, what is that one, 54. So if you're looking to buy it, what you're going to be looking for is you're going to be looking for to get down to that level with like less than 50 million. And that, I use percentages. So that's what you kind of, that's, you know, what you can say, okay. And if it comes down there like with less than 10%, meaning like 50 million, 45 million, your reject price, that's the buy, man. You know, because you not only basically have some support at that level, meaning at the level of September 18th, but that level over there from June until June 10th until the 15th, that's another buyer over there. That's a fund, that's something over there that wants to hold it up. So,
and I think in general, what you're going to see with some of these stocks, the best of the best, like you're talking about, Microsoft, right, Apple, even Amazon or something, is that, you know, as the airlines all accelerate higher on the economy opening back up,
yes,
you're not seeing these companies decelerate that have benefited. What you are seeing, though, is they're going to have to consolidate. Everyone's not going to sell the farm. They know Microsoft's going to be fine. They know Apple's going to be fine.
Yep.
But they're also going to want some exposure to all of those companies doing well, opening back up, right? Disney, Uber, airlines, Macy, or whatever, you know.
They've made money in these ones. It's like, okay, you want to take some of that money and, you know.
A little bit, right? But just like you said, in the long term, if they ever see these companies in the same way start getting down to those levels, well, then they'll start, people are going to start buying. So you'll see and this is just my feeling, right? Fundamentally, you're going to see a consolidation. It might be wide, but you're not going to see, when the other stocks are spiking higher on the reopening, you're not seeing these spiking lower. Even though when we got bad news, the airlines tanked and these tanked upward. Now you're going to see these consolidate while the others catch up, and then maybe there'll be the balancing or whatever it is.
Which really shows the strength.
I agree.
You can find out more, folks, on a down market, to me, than an up market. And that's exactly the reason. Do you know what I mean?
We're so young in the world of technology taking over everything.
Right.
That's the grand, like, seriously, as I look at it. You know, this was a huge acceleration. But if you don't think there's still rapid growth in terms of technology, man, it's happening, and you're seeing it, man.
No doubt.
Yeah.
Let's go to Mark in Bedford. Hey, what's going on, brother?
Not much. Happy Thanksgiving, guys.
Happy Thanksgiving. Let's get that turkey.
Mark. Not yourself.
I want a turkey sandwich right now.
Perfect.
Yeah, well, just remember, stuff the turkey, not yourself, and keep that COVID 6 feet away from everyone at the dining table.
Yeah.
So I have a whole bunch of questions, including one on Microsoft, which I'll get to in a moment. But my first question is with Tom, and that's for real estate. Tom.
Stay right there.
Are we going to break?
We are. So stay right there. We'll be right back. Stay right there, folks. Tommy, Mark, myself, we're coming right back. We have the Dow up 78. NASDAQ is down 26. S&Ps are up 2.5. We'll come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow Industrials right now are up 96. You get the Nasdaq down 19. S&P's up 4.5. Let's go over to our man, Mr. Teddy Cakestad, as we do each and every Wednesday at 40 past the hour. You can reach Teddy, folks, every trading day at forex-trading-unlock.com. That's forex-trading-unlock.com. Teddy Cakestad, we're going to bust out that dollar. What's going to happen with that dollar, man?
Well, the U.S. dollar bears are definitely trying to keep on putting some pressure on all the different currency crosses to the upside that's against the dollar. But I think you have to really key off the, like the European ones right now. We have the Brexit situation. I think that's containing the euro. Interestingly enough, the pound is trying to make a new wave high on a daily basis. It's trading just below the daily high that was set about a week and a half ago.
Right.
So, I don't know. If we get a breakout in the pound, I think that's definitely very bearish to dollar, as far as the index is concerned. But I don't think you're going to get much follow through for the euro and the pound, though, until the Brexit deal is done. Maybe in the other currencies you'll see more follow through. But right now things are looking, at least on a technical basis, very bearish to dollar.
You know what's amazing, Teddy, is that Tommy and I were just talking about this, that the pound, it looks like it hit the highs of last week right to the 10,000, right? 1.3312. It's like, really?
Right.
That's pretty wild, man. It's like, okay, if we ever could figure out how you can test something to the 10,000, it'd be pretty cool, man.
Yeah, how about that, right? Seriously. So, but there's some reasons for strength in the pound and the euro as far as the fact that at least we know that they're already talking about they're going to have some agreement done by the 31st because they're already talking about post-Brexit trade negotiations. So we know that they're going to seal some sort of deal by the 31st. There's no question about that, and they're already saying that we're willing to already work after the 31st. Just think in January we won't be talking about Brexit anymore. It'll be post-Brexit.
I know. The amazing thing to me is that, first off, that it's been going on so long, and it doesn't seem as important, but in these currency moves, there's going to be important.
It will become the first of the year. Absolutely.
Right. Yeah.
Absolutely.
You can really see it, man. And, of course, there's always life after death. And that's, because when you look at this, folks, everything was supposed to be the end of the world, and guess what? It's not the end of the world. It's
right. The sky is not falling.
Yeah, society's moving on. That's the bottom line.
Right. Right.
So.
Now, here's the one thing I would say is, I'm not an aggressive dollar bear, and the way things are setting up, especially the euro, if the pound fails to break out to the upside on a daily basis or sustain a close and trade above that, I think it's actually a very bearish indication that at least the pound and the euro, the dollar will probably get some strength. Where we're going to settle into a range. So we may be actually hitting the extreme now because the dollar index hasn't made a new weekly low. What's that?
No, go ahead. Yeah.
Well, what I'm saying is, like, I'm starting to smell a bear trap, kind of like betting the Bears on Monday night. You know, I mean, the Vikings was the way to go. They were baiting you. Like, this is now where I think that you have all these dollar bears. Everything's like, oh, the sky's not falling. The stock market's going to the moon. Blah. Everyone's going to be all happy and blah, blah, blah. It just doesn't seem right. So I think at least a correction. I'm not saying a big dollar bull move is going to happen, but it wouldn't surprise me to see, you know, like, for instance, if the pound doesn't break out to the upside, and if the euro can't get a rally and take out its daily high, like around 119.21, the dollar index is going to pull back, because that means those currencies, they have others. If they're either strong or they're not strong, and if they're not strong, they will not get over those levels. Which means you're going to settle into the range.
No, I can see it. And I mean, I'm a long-term bear in the dollar, but I can see it every time we come down to this. That, man, it shakes and rattles and rolls and say, "Let me out of here, man." Do you know what I mean? I'm getting out of here, and you can see it, folks. I mean, the bottom line, you know, we came from 99 down to this basically 99 in March to 91. But each time it gets near this, man, something happens and it says, let me out of here. And there's no doubt. I think, you know, that, as you just said, it has to do with the euro and the pound. If it can't make it, then guess what? It's going to get another bounce. It makes it, and then, bang, I think we could be at 88 in a second. Because I think this has been like building cars. So what happens normally when you build cars, folks, whether it's higher or lower, once it breaks that area, then it's fast and furious, either higher or lower. Do you know what I mean? Because it's been there a long time, man. I mean, it's been hanging tough. There's no doubt, you know?
Right. So, and here's another thing, too. I would watch the yen. Especially if like right now, if you look at the currencies that are really bearish today, it's the yen, it's a couple of your lesser currency crosses. You know, I mean, the pound is obviously making a move, but even for the pound, it's not having a really big range for today. The euro is quiet. The Swiss is quiet. The Canada is relatively quiet. You know what I mean? Yes. Like, if you think about where the volumes are, like, I even look at the bonds, like, volume is dropping off. So when you have thin volume and you're starting to push extremes, it scares me about as far as whether you're going to get follow through there or if you're going to see a spike. You know, so it wouldn't surprise me to see even the pound maybe spike high, and then all of a sudden the dollar gets a rally going into the weekend, especially. Coronavirus isn't going away yet. The vaccine's not out there yet. Right. You know, we have to get through another 6 to 8 weeks at least before there's whatever, maybe early release of what have you, you know? Yes. So, and we have to live through that. And I think it's going to be a little bit damaging first.
And you know, folks, when you're listening to Teddy and we're talking about the bond, you got to see this. I mean, you know, when the bond broke down, the number on the breakdown was 173.16. Well, guess what? We hit 173.15 today. This thing, you know, that's a normal retracement in a market that is lower. But, you know, I'm looking at that, Teddy, I'm saying to myself, you know what, man, this thing is going to try to get back inside that range. And that would be like, you know, fundamentally I can understand it because the aspect of the Feds are saying lower for longer, just all in all. Technically, I can understand it, but I'm looking at it, I'm saying to myself, is that the first hint that this S&P really wants to go south and that bond will fire up in about 2 seconds?
Exactly. It's setting up. Can you imagine? I mean, think about this. I mean, I've seen the S&P do this before. You have too. Like, this is all a happy rally. Yeah. No happy rally is ever a good rally in the S&Ps. It just isn't. I don't care what anyone says. And earnings season is almost over. So, I mean, that's where I think that, you know, earnings drive a market. The gas is already going to be let off the, you know, you're going to lay off the pedal a little bit. What's going to happen? Profit taking, baby, you know. Well,
you know, you can see that in Lowe's this morning. Lowe's same store sales are something like up 26 to 30%, right? And Lowe's is down $9. It's like, okay, man, what are you going to do for me now?
Right. What's left over?
Exactly.
You know?
Now, Target went the opposite way. They good earnings and it's going up, but you can scratch your head on that one with Lowe's. That's for sure. Do you know what I mean? There's no doubt about it.
Right.
Well, listen, man, it's always a pleasure. Oh, look at that. We get to talk to you the day before Thanksgiving, man. That's going to be good.
We get to have a little holiday get-together next week for sure. So, but we'll see. You know what? Holiday markets, you know how they're thin and crazy. Yeah. I think that between now and then, we could see a little spike, and we'll see what kind of action we're going to have going into the December trade, for the last month.
What you just said, I remember the biggest day in the market that I ever saw that pushed things around. I think it was 1996, man. Is that the day after Thanksgiving, that half a day, No matter what you hit in the keyboard, folks, it went up. Everyone was just hitting everything. And then it totally came back on Monday morning. And it's like crazy. You have a great one. Safe
Good
one,
old
Teddy.
days.
We look forward to speaking to you next Wednesday.
Take care.
Thanks,
guys.
Teddy.
You're welcome.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar's worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 116. NASDAQ is down 1. S&Ps are up 7.5. And, folks, as you come over to our website at TFNN, you're going to see right under featured content. Tomorrow, special day. Our man, Mr. Basil Chapman, is going to be doing an all-day webinar. It's going to start at 9 o'clock in the morning, go to 4:30 in the afternoon. Check it out on the front page of TFNN. It's a great educational deal. It's only $295. You get the full webinar with Basil. You get his newsletter for a month. And he also has about 9 other archives on the site that you get. So it's just a fabulous deal. Big time.
Totally, man. Tomorrow.
Yes, sir. Mark, thanks for holding, man. Appreciate it. So S&Ps, right?
So,
is that what you want to look at first?
Yeah. So it's well. Before I ask an S&P question, I have a real estate question. Tom, we've lost 250,000 people to COVID, and they say that we could go as high as maybe 4, maybe even 500,000 people, 400,000, maybe even 500,000.
Yeah.
My question is, with that many people passing on from the COVID thing, how, if at all, will that affect real estate? Supply and demand, is less people in the country. Is that going to affect real estate at all, do you think?
That's a great question, man. Let me tell you, I was paranoid in March when this thing came down because I build a lot of houses. I have a lot of rentals. I haven't missed one rent payment. I've got over 15 to 20% more for the houses. I know it's whopped, but the bottom line, it is what it is. And people are moving. Well, I'm giving you my market here in St. Petersburg. People are moving in. They're coming from everywhere. I just had 2 people yesterday move in. One was from Minnesota. One was from New York. And you know, and this market here, you know, Minnesota not so much, but New York, they're coming out of big money. They come into a market that, you know, is not a bit, well, 600,000, 650, but that's nothing compared to where they just came from. So
they trade a 2-bedroom apartment for a 5-bedroom house.
Exactly.
Interesting.
Exactly.
Thanks, Mark.
I'll call you tomorrow, Friday.
Okay, cool.
Okay.
Stay right there, folks. Think of Swim coming up next. Thanks, pal.
Thanks, man.